What's going on, everybody? Jason here, SmartHelping.com, live financial modeling. And today we're going to continue on with our PaaS product as a service financial model integration into a three statement model as well as a cap table addition. Um, Yesterday was pretty cool. We did a lot of the um, financial statement stuff. Also, I used the inventory logic that's in the base template that I'm using to do all these integrations, and the inventory logic went real smooth, and it all works really nicely. So that was awesome. Also, don't forget to subscribe to the channel, like the video. Your support is appreciated. Most importantly, if you want to check out all models and templates, go to smarthelping.com. We've got hundreds of things over there for all different industries, as well as not just startup models, but also different cash flow waterfalls, and a lot of tools for HR departments. A lot of stuff in Google Sheets there that are really useful. Also, inventory tracking, inventory forecasting, accounts payable and receivable tracking. So a broad bit of things that are all built in Excel and Google Sheets. Everything's fully editable once you get it, and you can do what you want with it. Okay, before I get started, let me do a sound and visual check because I'm still playing with the resolution, so you guys can try to see the entire workbook when I'm working on it. So 1 second. Let me test what this looks like. Okay, so there is some black. Oh man, how can I get rid of that? It also does not look clear. Let me check the other one. If I do display. Oh, that's really bad. Oh, this is horrible. All right, hold on. We gotta fix this. Let me try a different resolution. That's not good at all. And I don't think if I change 100%, that probably doesn't help. No. Whew, that looks horrible. All right, guys, hold on. Stand by. The window capture seems more clear. Oh, this is bad too. What is wrong with this? Alright, we're changing resolutions. Oh, this is annoying. It's mainly because I'm streaming on a TV instead of my normal monitor. Let's try, what did I do yesterday? I think 1920 by 1440. Ah, yes, this was it. So this is what we used yesterday. That should come into focus. And we also did, I think, display. Yeah, we did display. Well, it's really clear on my screen. Let me refresh the YouTube stream and see if it's just on my end here. No, I can't see anything. Test. Test. Oh, the sound's working. Why does that look so bad? Um, if you're a viewer, you type in the chat here, can you see the resolution? Can you see? Okay. When I'm on the Excel sheet. It's odd that this worked, this same resolution looked fine yesterday. me try to reload it one more time. Might have to restart OBS. Or is my phone running at a low resolution? Oh yeah, it's running at 144. Hold on. Let me try auto. Yeah, 144p is not going to do it. Why is this so blurry? Okay, hold on. Let me check on if I go to my desktop and try to see what it looks like. Oh, this looks fine. Maybe it's just my phone. If you guys can let me know what the resolution looks like in the Excel sheet, can you guys see this? Anybody? I mean, my phone's saying it's doing 1440p, which doesn't seem right. Let me try this. Oh, there we go. I just applied a higher resolution and now it's fine. Okay, well, sorry for the delay. Everybody's probably gone now. It's okay. So today what's going on? Well, I gotta actually figure out where we left off. So the income statement looks good. We've got all our inventory, cost of goods sold, inventory all matched up. Annual's good here. Cash flow statement looks good. All this flowed in real nice. Statement annual. Actually, I think we're pretty close to the end here. We did a lot on yesterday's stream for this. Yeah, I guess we're about up to here. So let's do owner's equity, which is just going to be contributed funds. So we go to the cap table. We're going to do outside investors as one, and then founders, employees, operators as second. And this equals total contributed. Oh, we'll have to update this reference error. Let's see what's going on with the cap table. So this is going to be equals negative min of the minimum monthly cash position. Now we'll have to update our P&L detail here to account for all of the logic we added with the cash flow. But it's going to be negative cumulative cash position. Taxes we're going to be calculating, so this 261 is what we want. So there's a number in there, at least for now. It's not right yet, but it's at least there. And then on this, let me pull up my the last one we did, which was web app traffic conversion model. Just check real quick how I did the balance sheet on these. Okay, so I did have that logic. So T5. All right, so that just stops it if we get to an end month, then it'll just zero out. Remember, balance sheet's always cumulative on about everything that you're looking at with that. All right, we're out by a bit here. 72 looks like equity amount. So let's go to cash flow statement. Sale company stock would be that number. It'll just be this total actually. Minimum equity needed, and then this is all just zeroed out. Balance sheets are great for it's like an advanced sanity check, honestly. All right. Well, this is cool. We're all balanced out on that. Great things. Let's check some more of these formulas. So, see if I did anything else extra on this. No. Retained earnings. No, I think we're good there. We did update it to cumulative depreciation. Let's go to the annual. I know there's some updates here just on these totals. So non-current assets, we want to make sure that zeroes out if we have a end month or a terminal value that was selected. Oh, this is actually not even formatted yet. Hold on. Freeze. Expand. Remove grid lines. Extend column width 15. Oh, we do have inventory. We do have inventory now. Which should just be calculating. Could be 0 at the end of each year. I don't know. No, it's not. Oh wait, yes it is, because every 6 months we're buying it. Let's do an odd number just so we can see the balance in the annual. Let's do every like 7 months, just for fun. Ah, there you go. Now there's inventory balance. Cool. Now we might have some logic we have to do with this or not based on our different timing assumptions, because this is the first time we've done this integration with inventory in it. All right, this is what I actually need to update. So we're just saying if we are including exit value and this equals the exit year, 0, otherwise just sum it up. Okay, that looks good. And then accumulated depreciation, we'll have to adjust the rows on that index formula, but it should be okay. Index, so this is 34. Where's our accumulated depreciation on here? Oh, it is 34 still. That's good. It's nice using the same positioning on all these when I'm doing the updates, because most things are... Oh, why can't I get to the bottom corner of this? Most things are lined up nicely. If and this should be 0, I feel like. Let's make sure this is yes, and then terminal value year is 2026. Oh, I know. So this is an ad I did up top. So you see on this one, I put the years up here. So we'll paste that in, and there we go. So that looks good. Let's check the long-term debt calc. If you do want to get the, well, obviously you could just buy any of these templates I'm doing the upgrade on, and you'd have all the logic. But if you want the base three-statement model that I'm using for all of this, um, it's available for free if you purchase anything at smarthelping.com, or you could buy it for $45, and you also get any startup template that's $45 along with that for no extra charge. All right, where was I? This. Don't freeze. I think that's, let's see. Yeah, this is the same calc. C7, D24 and 5. So cash flow, we're actually going to be doing 28 and 29. And no, people make a lot of money doing this kind of stuff. If you can learn it and it becomes easy for you, you can easily make a living. You got to be good at negotiating though, and all the things that come along with just doing a good job. But it's fun work. You can take your time. If you like puzzles, this is definitely for you. All right, is our balance sheet balanced? No, we got to update this too. Usually the balance sheet's always the hardest, and the balance sheet annual is really the one that's tricky. All right, we got that, and then that just goes across. Oh wait. Oh yeah, but we have these formulas down here to zero out the rows if we end the template at a given month. So okay, this is easy. Hey, zero balance or zero check. That's good. Um, let's increase some. Trying to figure out. Let's get onto our monthly P&L detail. So what do we not have in here is my question. We got startup costs. Uh, we have funding. Investor funding. Why is exit proceeds? Okay, so what we'll do is just reference the cash flow statement for all of this. Debt payback. All right, let's just start here. Cash flow. Actually, we don't want that in here because we're going to calculate money from investors after we know the minimum. So we don't want that in our calculation. It'll be a circular reference error. Okay, exit proceeds definitely in here. So We go to the cash flow monthly. We've calculated our exit sale of business right there. Debt financing, if any, simply go cash flow, long-term debt. And that payback we don't have now, that will actually be in the amortization schedule right here. We don't really need this debt balance because we have a balance sheet now that will calculate that. Now my question is, where's principal and interest calc? If E4 is greater than C5, do we need to update that calc? Probably. If it's greater than C6. Then end it. Otherwise, some debt schedule D. All right, so that should be right. Where's our debt schedule? Oh man, come on, click it. January. Just the formatting. All right, so we want to sum up C and D if J matches. Oh, it's coming in through now. Great. And yeah, C and D if J matches, perfect. So that's correct. And there you can see the principal comes in that exit month. All right, so that looks great. Go back down here. So we've got exit proceeds, debt funding. We want to add in here Capex, capital expenditures, which is now all linked into depreciation and all of that. Oh, I don't want to be on the actual Capex tab. I want the Capex here. And then sale and sale depreciable assets also. Sale fixed assets. And then that total sale of business and depreciable asset should be the total proceeds from selling the business plus any value we put in for the building on the sale date, if we're going to count that. If you want to, you could put a value in to the Capex on the top row. And then I think we have everything after this. Oh no, taxes. All right, so this, extend this for 15. I'm hoping that it's easier for you guys to see everything now that I adjusted the resolutions. Oh man, I am getting a little hungry. Oh, let's bring all this over. Okay. Format this like the other formatting on this tab. So for this, we have taxes manually input. We're going to actually, now we've got it manually or automatically calculated. And so we can reference that here. And yeah, this is no longer a manual input, so no fill. All right. This min calc now should result in the right number for equity needed. Let's go to the cap table and see. 1.6. See, that's working. That's good. Let me make sure if I raise this up, this should go down. Yep, good. Okay. Now the real check is going to be on the balance sheet cash flow up at the top. We should see a zero out. Nope, we see a negative. So something is, we haven't calculated everything because something that should never be negative because we're solving for the min equity needed. So we never have a negative cash balance. That's what the model solves. So what are we possibly missing? And then we'll have to update the annual P&L detail as well with these new figures. This section can be deleted. So we're not counting something that's in the other sheets but not in here. Got our startup costs. Oh shoot. Reference error. Alright, debt funding. All the Capex. Startup costs. Oh wait. This is not calculating right. So it is funny when you're doing accounting, you are, if you don't balance or something's off, you're like really trying to find something that's wrong because you know that's probably what will fix it if you fix that. So here, that was obviously, this cash flow was not calculating all of these new items. Now it is. Let's make sure. Debt service, EBITDA minus debt service minus startup costs minus taxes plus the net of this, which is doing, yeah, okay. Now I don't know if this update was just because we deleted those rows. All right, let's go back and see if that worked. Nope. Nope. So that error I just checked was just because I deleted the rows, so there was actually no error before. 11,000. What are we missing here? I mean, it's going down by. There's something in here that's not translating. Ah, oh, that's it. So inventory. All right, so look at this. We got to do this. So we can just do it down here. Add back cost of goods sold for inventory. Subtract inventory payments, and that should both affect cash flow. So here we're going to add these back. Which one is it? Where is it? This and this. And we're going to subtract. Let's go to the cash flow statement. Inventory, actually, yeah. And then cash flow should then sum up that to get the right number. Okay, let's check again. All right, looking better. Although I'm not seeing any negatives until over here, or no zero balances. We should never see a negative cash balance. So what happened here? October 2023. Looks like a bigger inventory purchase. So if we go back over here, cash flow, and also just in general accounting, cash is always the hardest thing to reconcile. Always. Oh, just thinking here, what could it be? Let me zoom out a little bit. So what did I say? August. So here's a $94,000 inventory payment. See, this cumulative though should be tracking all this so and show us what we need to never go negative. So what? Oh wait, did I reference the wrong row? Hold on. So this, we're not looking at equity required. So these are the same, 241. Let's go over here real quick. Min equities, Yep, 241. Let's go in here. 2108, 2108. This is all zeroed out. That's good. Why are we going negative? October 2023. What in the world happened there? Okay, 745,000 in inventory payments. Are we missing that somehow on the P&L detail? Because that should be accounted for in your October 2023. Let's see. Yes. Wait, no. It's right there. So I wonder if this is an issue of, let's see, negative 2108. 2108. Is that the lowest number here? Oh, I know. I know, I know. Wait. Yeah, that's it. 2108. So if we go back over here, what are we saying? Is the minimum equity 2108? Yeah, 2108. Let's make sure. I guess I could have referenced the wrong start month. So this is D, column D. Make sure everything's starting in column D. Oh man, isn't this fun? All right. D, 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 D. Yep. D, and then that's up there. Well, let's check the total cash flow. I have, this is another good check here. So I have 62, 587, 496, 62, 587. And here I have 42. Okay. That's a big difference. Hmm. I mean, that's a big difference. So we're adding this back, 257, add it back, and then that. Yeah, I mean, that's right. How are we out by 20 million? Oh, hold on, hold on. Am I subtracting a negative number here? Possibly. It's 239. Yep, yep. That's it. I was subtracting a negative number in the taxes. So 239. This has got to be plus. There we go. Now we're at 40. Let's see. Now how do we look? Hey, look at that. Cash goes to 0 on October 2023, and that's that's where we have that last big payment, and then from then on out, we're good to go. And yeah, that was the issue, taxes. So it's coming through as a negative from the cash flow, and I was actually subtracting it, so on the P&L detail. Oh, that was fun. Let's get the annual updated with all this. So other cash flow items. It's 230. Except for now, I can just sum up. The monthly. Oh, I want those lines in there. No border. Bottom. Bottom on this. All right, and let's zoom out of this a little bit so you can see all of it at once. So this is fine. Update here. Remember, we want to add also this reconciliation for inventory 257. Okay, and then what else? Those are all pluses. Taxes, remember we got to change the sign there to plus. Plus 239, and we also want to do plus this and this. Okay, and then oh, hold on, we're missing some things here. Yeah, this has got to come down. Okay. Now, cash position. And really, this is redundant. We don't need this at all. Let's remove that from both of these. And we'll see if we match this equals, or no, minus this, and perfect. Okay, yeah, that's one of the hardest things is reconciling the original P&L and cash flow with the formal financial statements, and they are the same representing the same thing, so they should always be balanced and match, which now they do. Still got a fair bit of things to update, but let's check our balance sheet. Uh, Hold on. What changed? Uh, what? Oh, okay. So I cleared out those other rows. Now we need to re-reference our cash position. So we're actually going to reference 238. And where's our zero? Perfect. And note you can put reserves or contingencies in, like you can figure out your total equity needed, and then go into your startup costs. We got to reform. This has got to be. So I want revenue stuff over here, and then actually all this stuff needs to be over here. But unit sales, subscription, that stuff needs to be right at the front because that's how we're driving everything. So on startup costs, you could just put a reserve in here, and that technically means when you hit zero, in theory, if assuming all your assumptions are 100% accurate, which is not usually the case, but it just means that you would um, have this, whatever reserve amount you put in here would be available when you do hit zero cash. OpEx needs to be more operational stuff right there. And that schedule could be at the end of that section. All right, that looks good. This all seems great. Cap table, we need to remove the see distributions is one word. That's why I can't just do find and replace on these. Oh, wait, do I even cash distributions? Change this to distributions. And the spacing on that must be different. We'll have to go into the distributions and see what target rows we should be looking at. also this is all needs to be adjusted. So investor cash flow percentage, their fully diluted value here is 34%. And this is just 1 minus that. Also, we'll try to reference everything from the cap table on these. Holy moly, I'm getting hungry. What time is it? 10:50. All right, let's see. All right, so this needs to be looking at not D10, D10, D10. Wait, is it negative? Oh, hold on. This isn't. Oh, we gotta update this. Uh, so what we're doing here is just structuring for this kind of cash flow. So this is just the total equity contributed up front, and then we should match our 42, 40, 444, 706. And that should be matching our balance sheet cash ending position. 40, 444, 706. Hold on, we're at 42. Oh, because this is adding in, hold on. This is adding in the equity as a cash in from the perspective of the company. From the perspective of, where can we put this? So if we sum up the total cash in 42,599,603, that should match our ending cash here. 42,599,603. Yeah, it does. Okay. So all numbers are copacetic there. And again, we want 10. All right, row 10. Okay, good. So we're seeing the right numbers. Oh, don't want to hide that. Column with 11 there seems good. So this is just taking the fully diluted ownership of each entity, insiders and outsiders, multiplied by the cash distributions available per period, which is yearly here in this case. And then you've got their initial investment, so you calculate internal rate of return. And that's what we like to see, zeros on the check. So D24, so that's investors, outside investors. And so we want 25 and 17. Good. Alrighty. That's all lined up. This is been worked on. Remember to check out SmartHelping.com for all your template needs. Inventory, startup costs. Capex is updated. We're getting close. This has got everything. We could zoom out now because we got a different resolution, so 100% should be fine to see. I'll keep that at 110. All right, I mean, I think we're ready for value checks. If we had any viewers here today. Oh yeah, off and on, off and on. That's great. Man, I need to eat. And we had a rough basketball game last night late, and I'm kind of tired from that, so I might just call it today. And tomorrow we could just do all the checks and finalizing formatting. Maybe start on a new template. What's up next? Let's see. Let's see. Let's see. What's going on, viewers? I'm just looking at our schedule for coming up. So we've done the SaaS upgrade, the franchisor licensing, equipment rental, traffic conversion based, recurring revenue. We did the car wash. Right now we're doing products as a service, which was the first one. We had inventory. That went actually very smooth. Next, we got freemium, mobile app, and professional services. So three nice ones there. We'll do. These are actually going to go pretty quick. There's no advanced logic um, that we need to worry about. So you don't save that. So on our PaaS model today, we did pretty good. Had a little hiccups with the inventory or with the reconciliation of cash from the P&L details and financial statements, but we figured it out. I think we're pretty close to being ready to do checks, all the checks on all the statements, and then update any of these, you know, clear out the blank rows. So these income statements and balance sheet stuff looks good. Overall, I'm very happy with this. I think we improved the PaaS model. It's a $75 one-time fee. Don't forget, guys, check out smarthelping.com for more. I'm doing these streams every day at 10 a.m. to either 11 or 12. Today I gotta go eat, and I'm just tired, so I'll probably be done for today. But I'm welcoming anybody that wants to say anything or have suggestions or just say what's up. Come into the chat. As long as you're a subscriber for free, you can do that. Don't forget to like the video. And I've been doing these integrations for a couple weeks now. And we're going to keep doing it until we do all. I think I got about 60 startup models that are all going to get this upgrade. So it's a lot of work, but I think it's worth it. And I'm not increasing the price of anything. Alrighty. Have a great day. Oh, is today Friday? Oh, great, great, great. I hope everyone has an awesome weekend then. And we'll be back on Monday to finish this up.